The crypto markets continue to be volatile, with experts predicting further ups and downs as investors grapple with growing inflation, geopolitical concerns, and anticipated changes in U.S. monetary policy. We've got your weekly crypto update. If you enjoy the content we do here on this channel, please like and subscribe. Let's get right into the video. At the start of last week, Bitcoin's price momentarily surpassed $40,000 before dropping back down. On Monday, Bitcoin was trading near $38,000, its lowest level since mid-March. Ethereum has followed a similar trajectory, peaking near $3,000 last week before falling. And at the time this video was published, the price of Ethereum was around $2,800. Following news that Fidelity was planning to offer Bitcoin as a retirement investment, Bitcoin had a strong start, but risk aversion returned as investors focused on aggressive central bank tightening, a worsening Russia-Ukraine conflict, and a disappointing uptake of Bitcoin as legal tender in El Salvador. The conflict in Ukraine is one of numerous causes driving up the volatility in the crypto and stock markets. The growing popularity of cryptocurrency, as well as its recent integration with the stock market, has made it even more intertwined with the worldwide conflict. Inflationary pressure also plays a role, as are the Federal Reserve's projected monetary policy moves. Experts advise against making financial decisions based on news-related panic or excitement in either case. April has been Bitcoin's worst month in 2022 so far, with a loss of about 17%. Bitcoin began 2022 nearly twice as valuable as it was in January 2021, capping a year in which cryptocurrencies exploded in popularity and curiosity among the general public. However, Bitcoin has had a rocky start to 2022, plunging as low as $33,000 in January and swinging wildly above and below the $40,000 mark since then. Over the last month, Bitcoin has traded at a low of $37,585 and a high of $47,313. Last week, Fidelity Investments revealed that its 401k plans will now include a Bitcoin investment option. Employers, on the other hand, will have the flexibility to determine whether or not to offer that investment option to their employees, and the amount of Bitcoin that can be put into a 401k plan will be limited to 20%. Fidelity Investments is the first large retirement account provider to allow Bitcoin to be included in 401k plans. Bitcoin is the most valuable cryptocurrency by market cap, and it serves as a useful indicator for the crypto markets as a whole, and other coins such as Ethereum and some smaller altcoins tend to follow its lead. Now, despite the fact that Bitcoin recently reached a new all-time high, it was a rather typical uptick for the cryptocurrency, which is known for its volatility. That isn't to mean that investors should ignore swings in either direction. In fact, financial analysts advise against making large investment adjustments based on these fluctuations. Cryptocurrency is still incredibly new, and everything from innovation to regulation, regardless of price swings or what's in the news, can have a huge impact on investors. The U.S. economy declined in the first 3 months of the year, dropping by 4% in the first quarter, the lowest quarter since early 2020, according to economic statistics released this week. This is bullish for risk assets such as Bitcoin and stocks, as the Federal Reserve may become less hawkish in order to avoid a recession. Traders in Bitcoin, cryptocurrency, and stock markets are keeping a close eye on the Fed's meeting this week for any indication that it would deviate from its pre-announced strategy. Wall Street's consensus expects a half-a-point hike just on Wednesday alone. If you look at the history of bubbles, they don't make mild corrections and then race to the finish line 6 months later. Typically, a substantial correction of 50% or more occurs, and usually comes with an overshoot as well. According to some analysts, the Fed could raise rates by as much as 75 basis points as it tries to combat the highest inflation in more than 40 years. In March, the Federal Reserve raised interest rates by 25 basis points, the first hike since 2018. Bond yields, which move inversely to prices, have risen in 2022 as a result of expectations that the Fed will raise rates. If investors expect interest rates to rise in the future, they may demand a bigger return on bonds. We're going to keep an eye on this story, as well as all the crypto and market updates. Please leave a comment below on what you think. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.